Hello and welcome to Weekly Open. I'm Brian. We got Cred and Don both on the line today. We're happy you're here. We are about 5 hours later than normal, but that's okay. Nothing fun has happened anyway. We want to tell you about our partners over at FTX. You can have fun trading at FTX. If you go to weeklyopen.com/FTX, trade directly from one asset to the other. Trade any of the many products that they offer directly from the mobile app. Very low fee or no fee for most of those products. We're thankful to FTX for being our partners. Once again, go to weeklyopen.com/FTX to check it out. Let's get to the show. Starting with Mr. Don. You're on the left. How you doing, bud?
Good. Just enjoying my evening. I mean, it's kind of odd having it like at this time of day, but then again, it's actually my usual time because Cred and I usually do like our streams around like this time, so not that unusual.
You just want to cross post this one?
No,
it's not to our standards, actually.
Oof. Well, good evening to you too, Cred.
Good evening. Yeah, if we did the show any later, we'd have to call it Daily Open, but Here we are, adjusting, thriving.
Yeah,
it's also quite impressive. We have like we all do shows aside from this one, the newsletter, this, Twitter, that. It's like the market's in like a 0.5% range. We're making 5 pieces of content per week. It's like pretty impressive the amount of recycling that happens. But such are the markets.
Yeah. Well, I mean, at this point, we also just need the entertainment. So there's nothing else to do. Might as well create some content.
Yeah, who thought that have fun staying poor would be more suitable for the bear market than it would be for the bull market, right?
Yeah, seriously. We're literally having fun staying poor. So, what? That's just where we are. It's just the way it is, and we're gonna deal with it. All right, somebody else talk. I'm gonna mute myself. Don, how's the market? I gotta tweet this announcement out without the clicky clacky keyboard.
Okay. Shit is the short answer, really. To me, anyway. Like just looking at this, right? I can start with the monthly, but there's really nothing there. We closed below the previous cycle high, which is like 20 point something K, 20, pretty much exactly 20K actually. Held that for a while, then broke it down. It's not really like an aggressive breakdown, so I wouldn't say like, okay, this just needs to go to the next support. But it's still like this is a sign of weakness, right? And doesn't have me too excited, but I think the monthly here isn't really too interesting. Gets really interesting at 14K. It gets more interesting at 24, like up here and down here. Anything in between is just not really that interesting to me on the monthly. That said, there's better time frames, and they're not really painting a better picture, which is, for example, the weekly, which is currently stuck at what used to be support, what is now resistance, right? So like this kind of area here that was support multiple times now turned into resistance. I could actually, if I wanted to, I could turn this box red, but I'll keep it for now. But
thank you.
Makes me feel so much better.
Doing us all a huge favor, yeah.
Yes. But it's a resistance. Like the top of the box is a resistance. This is usually what I look for. Like back in the day when I was aggressively shorting, this was what I was looking for. Now I don't want to short into 20K. That seems a little bit ridiculous. I think long-term 20K is a pretty good price level. Anything you get below 20K, probably going to be happy with in the next couple of years. That said, I mean, this is just a bad-looking chart, right? This is basically... Come again?
I was just say, isn't that the problem where it's like, may not want to short at 20K, but is this really an asset worth owning or an asset class worth being invested in at the moment?
Yeah, I would say no. Because honestly, like with this volatility, it's not really that interesting to trade. And then also with this price action, which has been large impulse, right? I mean, you can even go back here, large impulse, sideways, large impulse. Both of those have been to the downside. And then what we've had here has been like a pretty good bounce. We were involved in that a little bit. Like you have a nice bounce there, but nothing to write home about. And then you test the support again, and then you test it again and again and again, and it kind of gets stuck in that support. And that's not necessarily what you want to be seeing, right? Because this just reminds you of basically what we had in the 40Ks, where it's like we had an impulse, sideways, another impulse sideways. Well, I mean, you kind of don't really want to get involved at that point, right? Because it's leaning too heavy. Could do like the typical kind of like fall out of this area and then come back in, and then it gets much more interesting again, right? Let me actually remove a little bit of this. Too much paintings on here. But yeah, if you start losing this, then come back up again, starts looking interesting, because then you have a typical kind of range reclaim setup that you can long. You can also play momentum above 21, 22K, where you kind of aim for like this sort of, you have a low made here, and you just kind of hope that this momentum will carry it through. Like the moment we break this resistance, we get momentum, and that momentum carries us through all the way back to these highs, and maybe even all the way to resistance. But right now, like, there's nothing to do, I think. Like, if you want to be shorting this, it seems insane. Like, shorting Bitcoin below 20K seems a little bit insane to me.
Well, it's just easy to get squeezed on it still, right?
Exactly. I mean, there's basically, the market is very low volume, very low, like in general, just going sideways. And if you position yourself in any way, getting kind of taken advantage of is pretty easy. And you don't want to be in that position. So I want to take advantage of people if I can, which basically means if this drops, the floor drops out, I want to be able to buy. Or if people get squeezed, I'm just going to help the squeeze basically and trade that way, which was basically start, I think, above 21, 21.2, where you can get like a squeeze towards like 24, which is really sad, right? We're talking about 20K to 24K. We'd expect more from Bitcoin, but to me, this chart doesn't really offer much more right now anyway. So in a nutshell, basically very, very much not excited about this at all from a trading perspective. From like an investor perspective, it's starting to look pretty cool, just price level wise, but I'm a trader, not an investor, so nothing for me to do.
Yeah, it's actually incredible how uninspiring the bounces have been in Bitcoin in particular, but kind of across the crypto spectrum. And there's not even really been, unless I've just been unaware of them, like little places to go hide and play where there's like a bull market going on within the ecosystem, which I feel like we saw most of the time in previous bear markets, maybe minus a handful of months. And maybe that's a sign that, we're nearing that kind of peak depression type of mode. Yeah. Cred, how are you thinking about things? What are you looking at? Anything interest you at all?
I mean, I like charts, right? And sometimes the market just gives you somewhat clear lines in the sand to determine your bias. And both for BTC and ETH, that previous cycle level that Don was talking about, 20K and 1400 respectively, that's turned from generally being an area of support to generally being an area of resistance. And that's not good, right? So I think, and we're not asking for a lot either. Like 20K or 21K isn't far away, and 1400 isn't far away either. And that small shift in market structure of like trading above those levels and being accepted above them would be quite significant in terms of just a shift of flows, but we don't have it yet. So we set a very low bar for what would constitute strength, and the market has been reluctant to show it. And then if you look at it on even lower time frames, like Don was looking at the daily, for example, on Bitcoin dollar, you've got 20K as resistance, but then you've got the bottom of the range at 18K being tested for like the 5th or 6th time, right? And that's not something I rebuy because I can't. I'm like not allowed to. 6th test, best test, said nobody ever. And another kind of relevant backdrop to this is the volatility is like really low. The B-vol index, however you want to measure it, like we're reaching pretty like very depressed levels of volatility, and the market's conditioned to position for like short-term mean reversions. So like, if you see the market tick up like 2, 3, 4%, you've been selling that, you've been printing, right? So it's like small move, fade, print, small move, fade, print, small move, fade, print. But what happens is at a certain point, the volatility regime shifts and you get a 10, 20, whatever percent candle in one direction or another, right? And then if you've been running that strategy the whole time and that move happens, you get carried out, plain and simple, and you give back half or 3/4 of whatever you are printing on those smaller versions. So even from like a short term, if everyone agrees that swing trading, this thing sucks, even on a shorter term kind of mean reversion type of strategy, I see that becoming significantly less attractive, given I think volatility is like around the corner, or at least closer than it ever has been if you look at historical levels. So what can you do? The short-term trading now has a higher risk than before of getting blown out if you get it wrong, pretty much. And I think those short-term mean reversion setups are going to stop printing sooner rather than later. And as I said, the swing trading is unavailable. So what can you do, really? And as you mentioned, there are no real kind of pockets of altcoin strength or sectoral pumps, or apart from a few Ponzi schemes here or there. There's no chain link 2018 type refuge to find yourself in either. I guess one final point I'd make is I guess I somewhat disagree with Don in terms of like what to do with the breakdown. For me, I wouldn't be so keen to like step in front of it if it does start to break down. And it's for the reasons that he mentioned, which is that it would be a breakdown from like a multi-month at this point consolidation. And if that's in line with my previous reasoning, if you step in front of that, like in the middle of nowhere or too early, you're going to get run over, And there's like a lot of volume profile gaps and liquidity gaps on either side of this range breaking out. So I would rather, and I'm not a momentum trader. So look, if you're a good momentum trader, go for it. Like if you can position low time frames for momentum continuation on higher time frame moves, you're a legend. Go for it. I can't trade that way. I'm like incompetent, right? So for me, if I'm going to see a breakdown from like a very big multi-month range, the last thing I do is fade it early. I can do one of two things. One is just let it go. Let it go and then hope it ends up at a much higher resistance or a much lower support where I can trade like an outsized move into a fresh level. That's awesome. Or I can wait for it to prove that it's a failed break of the range, but only when it gets back inside the range does that idea actually trigger. Like, if it goes to like 17K, you can't say, oh, look, it's a failed break. I mean, maybe on a low time frame, if you look at order flow or something, you can say that there's some absorption, but until it gets back above 18, 19, whatever, only then can you argue that the break has failed, right? Once it proves to you that it has by virtue of not continuing in the direction of the break. So that kind of leaves me with two, I think, somewhat reasonable options. If it breaks, let it go and trade the levels hopefully far away. If it breaks and doesn't go anywhere, only after the moves back inside the range, I can be like, okay, these prices are attractive again. And it's an interesting thing because we can talk about 20K. It's like if the market's nuking on 3AC into 3AC liquidations straight to the 20K handle, that's a good buy. If the market's short-term retesting 20K soon after that, that's a good buy. If the market's retesting 20K as resistance for like the fifth time and floating lower, that's less of a good buy. If the market breaks down and reclaims 20K, then it's a good buy again, But as Don said, if you're an investor, you kind of have to filter for all of that and say that, as someone who expects multi-cycle thesis, all-time high, yada, yada, like 20K is a good price. It's just a question of like how much shit are you willing to eat in the interim if you're wrong. So just like 6K was a good buy in 2018, as long as you could hold through 3K, right? Sorry, that was kind of all over the place. But I guess the most important takeaway is like, look, previous cycles levels are decent lines in the sand to use if you're remotely interested in trading this thing. 20K BTC, 1400 ETH. That's a low bar for getting above those to show strength. And the market, if there's any strength at all, should be able to meet them rather readily, but it hasn't so far.
Yeah, the reason why I think it's really like if this breaks down, right, that it's going to be gobbled up relatively quickly is because market caps get hilariously small in comparison to the money floating around an ecosystem, which just makes me think anything that gets too discounted is just going to be bought up relatively quickly. I'm not going to like have like AFK orders at 17K. I think that's too close by. But anything like from 14, 15, 16K, I get anything in there, I'm going to be a very happy man. I don't really like, at that point, I don't even mind investing in this thing anymore. Like I had my investing periods, which was when Bitcoin was much, much lower. And I'm willing to do it again the moment we get into these price levels. So even if like at those kind of price levels, even if my trades go wrong, as in if I buy and it goes lower, I don't give too much of a shit about it because then I'm just going to be like, okay, this is an investment for me now. I'm just going to.
It will come back.
You now denominate. You now denominate in BTC at that point.
Yeah, Don just starts tweeting 1 BTC equals 1 BTC, puts laser eyes on his duck, retweets Sailor, all that good stuff.
I mean, that's what's going to happen. Like for me, when we drop like to 14, 15K, not.
You mean if we drop? If please. At least pretend, Don.
I'm not going to be the guy that's going to put on laser eyes at 70K, 60K. Like, that's not my style. I'd much rather be the guy that kind of buys this shit before it goes to zero. But at least like I'm buying at support instead of like telling people to buy this shit when it's parabolic and everyone keeps talking about it and it's way too highly priced in comparison to everything else. But I mean, that's just me.
Yeah, still the hard part, even in being an investor in that, is you can be thematically correct, and it could take like years to play out the way that you believe, and there could be some other hot thing that is the fast mover, a better bubble than your bubble. And crypto's never really been that. Like crypto's never been the like less shiny growth thing in the room. Like it's always been kind of at the edge of high growth asset classes. But anyway, just bear market talk, I guess. There's a couple of things that I wanted to walk through that are just going to reinforce your views. One, we have mentioned this a ton over time, but like we're just hovering right over the 2017 high, and it's really pretty despicable. And it's like we've needed all this time in some ways to justify getting to the levels that used to make me cringe, and now that I've kind of normalized as the next levels on deck. Which, to your credit, both of y'all have talked about as very realistic scenarios all along, like somewhere in the 10 to 14 range, but whatever you want to look at in that range. If you hover at these prior highs for long enough, if eventually that absorption, people that are like, yeah, I'm just gonna buy all the coins that people got at 20K. When those people are satiated, that's what allows you to move lower. There's a lot of talk about miner stuff. I'm probably gonna switch to a browser here in just a moment. A lot of miner talk. 200 week moving average crew check. ETH is now just grinding, hovering at that level. BTC still wrecked from it. The ones I wanted to point out though are the old S&P. Honestly, I would expect better in terms of amounts.
So sad. Sad.
This is the one where your boomer asset class should really appreciate this opportunity to DCA at the average price, right? Like everybody in that world is looking at this. And now you have a triple week tap. The 1 week that was bought up from it, it was faded by the end of the week, and here we are again. Maybe we do, maybe we don't, bounce off of it in a real way. But that's pretty weak. And the other problem is it's the only index that's even there. So when you look at NASDAQ, you look at the Dow Jones, you look at somewhere in here I have the Russell 2000. They're all below it. They're all treating it now as resistance. So you've got your S&P 500, your bastion of indexes. It's the only thing left standing in that world. Dig around to some other asset classes. Gold, after like pumping pretty hard on like just minor rate adjustments the last couple of weeks, now looking like it was a short squeeze retest type thing. Oil also had a interesting move. There's chairs moving above my head. Went from 76, 77 up to 93. I'm not sure if that was just a short squeeze and now it's in for a lot more consolidation, or if that's real and responding to other things. And now here's the glorious stuff where you honestly got to get off the weekly, because I mean the weekly is just depressing. It's so
well, in Don's world now, the weekly is just too quick.
the weekly is too quick when you get into these 30-year yields, but this I've got the trend line on this one. That trend line went right to the 200-month, and now we're midway through our second straight month of just turbo pumping through literally a generational resistance line, and channel, whatever you want to call it, horizontal. It broke out in every possible way. Rates are just going absolutely ballistic. Like absolutely ballistic. Every single type. You got the 2-year going back to 2007 levels. They don't look like they're slowing down. This is the type of train that is running very, very heavily.
I mean, that's how oil traded, right?
Yeah,
it's pretty much the same thing where oil went to zero and then just mega mooned. Same thing here.
It really is. And then now you've go to the real killer of all of these things. The dollar recovering from the very temporary top, which we can call the FTX Dixie Perp top.
Macroeconomists will call it that, right?
Yeah. But the Dixie looks like it might be turning to that level just month after month after month after month of relentless breakout. Like this is getting to the same degree of move after the 80s inflation. What happened to the downside then? From 85 to 87. This is an incredible weakening of the dollar at that point. And our strength in the dollar now is stronger than it was back then, which I also find just very interesting. I mean, this just on a monthly basis does not look very toppy. Like it just looks like it's just heading for the magnet. Of course, you get to daily, weekly, whatever, and it's just like, oh my God, when will this thing stop? The problem is, I feel like people are still going to want dollars as it consolidates, or like massive policy change. But from a pure technical extension perspective, all of this stuff is just going absolutely ballistic. And none of that is good for our world, right? Like you get to any of this and it just doesn't look good for us. This looks even more, to your point, Don. I know I'm taking your charts here, but that monthly wick looks really nasty into that resistance that you talked about previously, or one of y'all talked about that. It's just none of this in legacy land. And we go to a little macro LARPing corner over there, and none of it's very supportive of this being any better. It's not. It just makes it all look worse. Yeah, and so here we are. I don't have much else to add to that. It's just something that I've been watching. I want to flip back over to yours because I do have a funny anecdote that I want to share, but it's going to require me to share a whole different tab. My friend Johnny Moe found this tweet from today where I guess Kathy Wood urges the Federal Reserve in a letter to stop raising interest rates. And this is ARK at that time.
Oh yeah, I've read that letter actually. As you can expect, it's like a desperate bag holder pleading without much substance whatsoever. The core of the argument is that the data, the Fed said they'd be data driven, but they're using data which in ARK's view is lagging, like the CPI and unemployment data, etc. Their argument is that data is lagging, and instead you should be looking at commodities among other things, and those look like they've peaked, and therefore you risk over tightening if you look at lagging data, etc. Yeah, sure, very intelligent. ARK looks like dog shit. That ETF looks like it's going to zero, and I can understand why people are panicked and just literally writing public letters to the Fed begging them to reverse course to rescue their bags. I know that's cynical, but like you look at that chart, you can't not be cynical, right?
Yeah. When you look at the way this dumped, and then like this, even down to this tiny little bounce here, it looks just like at this peak anger, where the question at the why did the government allow this to happen?
Yeah.
So good. But anyway, I found that entertaining. Partly, if this continues to follow this Wall Street cheat sheet type of thing, sure, maybe you might, maybe you're close to the bottom. But the problem is all this, right? It's everything after that, which is many months of pain, sideways, chop, whatever, consolidation. Certainly not just Moon City. Accumulation period, whatever. Patience required is how you would qualify that. And this is also outside of whatever other market is more interesting. And that kind of gets back to, I guess, what y'all were talking about earlier, which is, say we lose this level, say we stay here, whatever, is there really an appetite for it to just moon, or is it the type of thing where we're just going to be stuck in a range for a really long time and we have to come to terms with that? And maybe we're just now coming to terms with that.
Yeah, I think the fetish everyone has is that they buy the bottom and then the next bull market starts. Whereas in reality, even if you do buy the bottom, you might be stuck there for 6 to 8 months, questioning if it was the bottom every single day, or whether it's going to be another 50% down move, right? The V reversal scenarios are really quite rare. Even the COVID one, which is by far the most kind of anomalous one in terms of liquidity conditions, etc., that was still pretty grindy, man. For something that should have snapped back as hard as it did, and where in the entirety of global markets broke, so you'd expect mean reversion to kind of play out a bit quicker. That was still grindy as hell. So yeah, the bottom is where the bleeding stops. It's not necessarily where the uptrend starts. Not with any velocity, at least.
Yeah, I mean, I still remember back when we broke 6K, right? So I was like, I wasn't positioned in Bitcoin. I was just like, okay, this looks weak, so I don't want to be in it. It broke down, and then it kind of headed towards 4K, and I think I actually bought this, either that or on the other side here, with a spot bag. I was like, okay, this is just like low prices, makes a lot of sense to buy here. And then I was a bag holder, and it went down for another 23 days. Is that days? Yeah, it doesn't sound too bad, but yeah, it was like a month of pain basically, and I bought a shitload more. But I was sitting in this position that was like on average like somewhere in the 3Ks for basically, if you count all of this in, for 4 months, right? And this was pretty quick, all in all. And
Yes.
it's not really fun to be in that position.
Because you log into Twitter every day and everyone's like, oh, see you at 1.5K, you know, it's going to zero. Like, why buy ETH at $89? You can buy it for $40. Like, you know, it looks from a time-based point of view not so scary.
I had
but
really
it's wild.
high bullish conviction at that time. And I don't have that now from a fundamental perspective. Like the rest of the world, how does it align with our potential? But also just like crypto itself, I don't know. I think some people thought things would never come back, whatever. I may not have had as high of expectations as I should have coming out of it, but I was pretty bullish at that time. And now the problem is you don't have that supportive backdrop. You know, you're not in forever QE and all the things that we had back then.
Yeah, I do agree with that. I think in general, if we drop lower on all things, like I wouldn't want to be too bearish in general on the S&P either. If this like has like another push, you talked about the Dixie earlier, and like when you just looked at this on the weekly time frame, it's kind of funny because all of these traditional markets trade like shitcoins now. I think we, like crypto people, might actually be the people that understand these markets the most, because it's just the kind of price action that we're very used to. It's very all over the place, makes no sense.
I mean, it looks like the 2017 Bitcoin bull market.
It does, exactly. And when I look at this, right, honestly, to me, this looks like it wants to have one giant push at the end of this and then top. That's kind of like how it looks like. Now, when Bitcoin does this, it's one thing, right? Bitcoin pushed to 20K and nothing broke, obviously, because no one really gives a shit. Bitcoin's kind of small. When the Dixie does this, like when we get like a candle like this, maybe, then we have like bigger problems, right, globally. So I don't know how to kind of interpret all of this. It does look like it wants to do like some wild shit to me. So when I'm in that situation, right, and like you said, Ledger, it's kind of like we're not really set up for like a run in crypto. I don't really need to risk too much. I just want to see how this plays out, right? I want to have a bunch of euro. I want to have a bunch of dollar. Like right now, I don't have too much euro, but in general, like I want to be positioned so I can take advantage of like any craziness, and I don't want to be the one that has to panic during the craziness. Now, obviously, if this just fucking giga nukes and I have a bunch of dollars, I'm not going to be too happy, but it doesn't really seem like it right now. So I'm just going to take advantage of any squeezes, any kind of craziness that we get.
If you get some, I don't even know what, like gargantuan dollar move that starts breaking country, and the Fed in particular, like U.S. policy is really a big part here in terms of debt denomination and you know the price of goods worldwide. If you have some huge thing that requires, like literally requires the Fed to pivot, and they have that pivot, that's probably going to coincide with that massive breakdown in Bitcoin and Ethereum, you know, the majors. Let's use Bitcoin as our sample. Whatever that push to the upside that legitimately wrecks regular markets, like stuff massively breaks, and there's calls hourly, daily, you know, emergency meeting type stuff because of the degree to which the dollar's blowing out topside. That's probably going to coincide with that capitulation in Bitcoin to 10, 12K. And if you get that, I do think that's why those levels would be attractive, because you're essentially buying and you just know you're going to end up somewhere in the wick when you go to like a monthly chart, to your point about what would attract you earlier, like Cred, you mentioned an outsized move that would make you a satisfied buyer. I feel like that would have to coincide with this Dixie taking whatever levels everyone assigned and then just blow those out of the water, like 130, 140, like blast past 120. You get that, and then that's going to look a lot like the type of capitulation that you need to feel comfortable that was the bottom, even if it's going to be slow after that, but probably was also a bottom.
Yeah, it's an interesting note on considering kind of stuff breaking. My uninformed pontification on this matter, when it comes to macro at least, is that it just feels like there are lots of cracks showing up, but nothing's like broken yet, like you mentioned. The whole like mass panic, emergency meetings, etc. I mean, the gilt market in the UK almost broke. It might break again because it's completely retraced the move after the Bank of England's intervention,
Well,
which tells you a lot as well.
Haven't they even increased the size of the intervention? Like they're doing even more, and it's still
yeah. I mean, I don't believe in bond vigilantism or whatever, but the market in general, isn't having any of it as far as the UK economy goes. And there was some pension funds that were close to being margin called on that, so some real scary stuff. But at least in terms of fairy tale scenarios for people wanting the cheap buys, the wicks, etc., something in macro world properly breaking, and as you mentioned, that coinciding with the 20k proper breakdown. That's sort of, I mean, if you're not trading that, what are you waiting for realistically? Like Don said, you can make a really good case depending on your time horizon, whatever, of buying Bitcoin at 20k. You'll probably be happy if you have like a medium to long term view of crypto, right? If you get that type of sub 20k financial markets break, etc., and even as a trader, if that doesn't get you excited or that doesn't get you to, poke a stick, then I don't know what would realistically. But ultimately, it'll end up being the same trade, right? Like you have to consider how people view this in hindsight. Let's say, oh, look, there was this tightening and near financial crisis and macro and everything was breaking. Were you a buyer or were you a seller? Ultimately, that's the only thing that's going to matter, right? And whether you're buying 20k, 18k, 14k, 12k, 10k, it might seem like the world now, and that's understandable given, we're looking at 5% daily ranges with extreme paranoia and obsession. But when it comes to the bull market, hopefully, right, inshallah, and prices are like much higher than they are and trending, etc., no one's going to make fun of people buying in the tightening cycle, whether it's a 20, 18, 12, 10, whatever. We're all being, like Don and I discussed at some length, we're all being greedy to some extent, right? Because, for the time horizons in which we want to be in the space, the 20 and 10 are a distinction without a difference for the most part. It's just we're just very kind of trader oriented and setup oriented and disciplined in that regard, and want to maximize the purchasing power, which we've done a lot to protect. So understandably, our kind of requirement for precision is also higher, and I'm sure there's some ego there as well. But for the average kind of investor, if you will, I mean, the market's retraced 5 years of gains across BTC and ETH. That's okay, No one's going to laugh at you for buying that unless crypto becomes a failed experiment. But in that case, there'll be no one left to laugh because we'll all be dead, broke, poor, whatever. So it's pretty asymmetric in that regard.
Yeah. At the same time, and I'm just throwing numbers out there just for the sake of calculation, you may be satisfied with 14, 15K. Let's just say 15K. You may be satisfied long term with a 15K buy. But in the midterm, if it like turbo nukes and you're down 50% because it goes to 7,500 or some number that's just mind-blowingly low, like you're going to feel horrific. You might puke it. Like all these things could still go wrong. And vice versa, if you somehow are just greedy enough, right? Like whatever that magical number is, you're just greedy enough and you buy with enough size, what feels like, there's $26 million of bid left on BitMEX before zero type of numbers. If anybody recalls that from March 2020, like that type of low liquidity, it's all over. Oh my God, like the whole ecosystem just broke. And that's when you step in, when it's just pure panic. The potential for upside is you're already at a double when the smart dip buyers were finally back at break even. Like you get that edge of the beauty of the tip of the wick, right? And most of us won't do that. I'm almost certain I won't. But that's what if you're trying to be greedy, that's what you're trying to be greedy for.
Yes.
Yeah,
but I think
then again,
go on, Don.
like if you think that we're gonna hit 7.5K, I think you kind of have to be realistic about it, because if we hit those kind of numbers, it's very likely that we're just completely fucked. I think at that point, it's like at that point we're gonna have damage that might be irreparable.
I think it'd just be liquidity problems. I don't know.
Obviously, like if you just get a wick down there and then immediately bounce the next day, then yeah, that's one thing. But you're not gonna feel like you're sitting there. This is kind of like the scenario where you kind of go to bed at 14K and you wake up and it's at 14K and you're like, oh, what happened? It's still trading at the same price level. You look at the 5-minute chart and you see that it's been trading at 7.5K in the meantime.
That's basically what I mean. I'm not talking about spending weeks down there. I'm talking about spending hours, in a 25-30% range.
Yeah, I mean, that I get. I think at that point it's not like if you buy anywhere during that time and you're not completely completely afraid and completely like scared to shits, which I mean you will be a little bit, but at some point, right, at some levels you just kind of have to pull the trigger and be like, fuck it. It's the same with the COVID crash. It's the same with any crash that we've had. I don't know why people freak out, because whenever it gets that bad and you buy, even if it goes down 20% in a week, it usually is like above your entry pretty much immediately afterwards. Every time I've bought in those kind of circumstances, I've just made a shitload of money. So I will be there to buy it if that should happen. And I don't really care if it's 7, 5, 8, 9, 10 or 14K, if it's like a wick to whatever. But I don't think that's going to happen. I'd be very, very surprised. Honestly, I'd be very, very surprised if we even hit 14K. To be fair,
It's fair enough. Yeah, I mean, look, the Ledger's scenario. You're sort of the reason it's so difficult is because you're asking the impossible, or more specifically, to do two things at once, which is have the entry precision of a very kind of precise trader, but then have the holding conviction of a medium to long-term investor, and that's really difficult because you're wearing two hats at once. Normally, if you're trading it like, again, very cerebrally, very mechanically as a trader, once you know you've got that good, like crazy good price, and it bounces 20, 30, 40% in 15 to 30 minutes, right? Your first instinct is like just to close and to get out of there. And a lot of the time, when you get those types of outsized wicks, as we all know, what often happens in the coming weeks is that the market kind of trades around that wick and backfills some of it and spends weeks down there. So you basically have to do two things at once, which is get that amazing entry, being very precise on low time frames, and then be able to just mentally switch off and fight every single one of your instincts to like close it or manage it or do something about it, and instead just go into a coma for like a year and a half or whatever until it properly starts trending. That's really hard, but I'm going to try to do it.
Yeah, and I know, and both of y'all did that really well in June 2021, and I learned from y'all there, which was you held for 24 hours or 48 hours, something like that, and then you were out, and then it backfilled most of that wick, and I don't recall whether you got in. Point was, you didn't really need to, healthier market overall at the time, more clear opportunity for puke, whatever, maybe, but point was you stepped in at that time, and then took the gain that was available to you. Anyway, I know we're talking about what capitulation might look like, but what else are you going to do when you're sitting here compressing at the lows?
It's got to be the bottom, right? It's just
like we keep trying.
Please,
we try so hard.
One other 50K to fund the bottom, and it's been tough.
I mean, yeah. Sometimes you just got to point out all the different kind of bottom things, right? And sometimes bottom things still could be 50% away from the bottom, but whatever.
You got another one for us, Ledger?
Yeah, I got another one. Zach Vol really connected to kind of Bitcoin mining stuff, and I'm just going to read what he said. So I think people don't realize how many miners are hanging on by a thread, which just go ahead and start there. That's typically a good thing, right? Like miner capitulation is one of the best bottom signals you end up getting, especially when it actually starts showing up in hash rate, meaning people are getting shut down. Most public miners are buried in debt because they're planned for an up-only market. Well-financed teams that bought new generation hardware are deploying it, causing crushing difficulty increases. If you look at the Bitcoin difficulty charts, like difficulty is rising like crazy, despite the price not. Hash price, which is the value of each marginal unit of hash rate, is down 70% year to date. Novice teams who sign variable PPAs, which is probably some kind of like energy usage agreement, are watching energy prices soar at the same time, blah, blah, blah. And the value of hardware is plummeting even as Bitcoin stays in a range around 20,000. Bitmain is selling S19 Pros for under $2,000. In June, they were selling for $6,000. Only the absolute best teams aren't in serious pain right now. This is the first time in my life I've ever thought, man, I should start mining Bitcoin. I mean, sounds like if you start gobbling up these machines over the next 6 months, like it's probably a decent investment.
Yeah, he should really speak to Calvin Ayre. I heard he likes investing in miners, but that's just a secondary point. Yeah, miner capitulation would be quite good. I think, as Zach mentioned, they also fall to the they kind of fell for it as well. Look, a lot of the industry, the reason kind of Don made the argument, and in general, there's all this speculation about the industry falling apart on another big breakdown, is because it's true. A lot of these businesses just don't have a model or don't have a price or didn't plan for Bitcoin getting to these prices, let alone lower prices if it gets there, right? And that includes miners who, have a lot of inventory to deal with. And it's just a nightmare trying to deal with inventory for an asset that, regularly goes up 10 million% and then goes down 99%, right? But yeah, I think that applies to the crypto industry as a whole. I mean, we went to 20K and like everything blew up. If we go any lower, I think the businesses that did survive or kind of just about weathered it through, they're going to be at risk again. And that's just that's not only me saying it. I think Sam Bankman-Fried was paraphrasing the same thing, that anywhere close to 10, 12K, whatever, a lot of these businesses, even the ones that have survived up to this point, stuff just breaks, man. And that's what also makes, if we get there, that's what makes those prices attractive, because that's like the extreme version of forced selling. And yes, forced selling does mean, you're not going to get the perfect entry a lot of the time, and it could push you around, but like structurally and fundamentally, it's a good area to do. It's always good to do business voluntarily where others are doing it forcibly. So if you can get that, good for you. It just doesn't seem like, at the moment, from the available evidence, it doesn't seem like 20K is that type of price. It's too sticky. We're there for too long. There's no real urgency on, in terms of lifting offers or,
It really
any of the things
feels
we
like
normally
6K,
look at.
doesn't it?
Yeah, like with every passing week, I think the analogy of 20K as the new 6K grows stronger, which is why I want to either, as Don said, the momentum trade above like 21, 22, that would sort of calm it down a little bit and, present a different argument. Or if the breakdown fails and gets reclaimed, then you can sort of restart the count, in terms of 20K being support again. But just drifting with vol compression at 20K is just isn't good. It's not. And I want to see us move away one way or another.
Yeah, and all of that is happening while the S&P looks like shit, right?
Yeah.
Which, I mean, if
Don, have you got the FUD chart on the monthly or the weekly, whatever?
Yeah,
on the S&P?
he had it popped up a minute.
Yeah, I had it open for a while. I mean, it's just basically we broke support, we were retesting it.
It's so bad.
This is just shit. And I honestly think, right, like, yeah, you have a few supports here and there, like, I mean, pretty close to price. But the most kind of important one is down here. Like, this is where it gets really interesting. Anything like above there, maybe a bounce, but I wouldn't want to bet the house on it. Like, I wouldn't bet, okay, this is going to be the bottom. I'd be surprised if we broke like into 2.8, like 2.8 or something, and didn't have at least a big bounce coming off of it.
I think that's certainly where you have people who've been out of the market for quite some time, and they'd finally say, look, there's value here,
Yeah. I mean, that's just basically pre-COVID prices, right? Which just makes a whole lot of sense to me, and it's going to make a whole lot of sense to a lot of people. Just like
you're washing out companies and sectors that were overdone for way too long, like washing them out completely, not normalizing them, like washing them out.
Yeah, and then it starts getting much more interesting again. And if that would happen, I think that would lead. I mean, if this really does go towards those kind of prices, I mean, there's almost no way that crypto prices wouldn't go down. But I don't think it would be as catastrophic as these first 20% have been. Like, because if you look, we're like down like 25%, and Bitcoin is down like what, 70? So I don't think that's going to happen again. Like, if this goes another 20% towards that support, I don't think it'd be as bad as the first time around, just based on the fact that the crypto market caps are getting reasonably small again. So they get interesting, and then you have a bunch of basically stable coins in the ecosystem still ready to be deployed, and at a certain market cap, it just gets easy. Like, it's too easy for like a few individuals to just buy it up. And that's why I'm like, if this drops and you get a buying opportunity in crypto, I think you take it. for me, kind of like the interesting part about trading this market, right? And it's always been this way. It's basically it comes so often to a breaking point, and then there's only one bet to make. Do you think crypto goes to zero, or do you not? And when it's like at that breaking point, and everyone knows it's at that breaking point because you can feel it, you just have to make one move, right? Basically, okay, you think it's going to zero, or you don't, and then you bet. And if you're right, you make a shitload of money, and if you're wrong, like you lose your bet. But that's not really the worst thing in the world, given the astronomical kind of risk to reward that you have. Like you risk basically what you put in, and then you have your reward. Like prices move from like 3, 4, 5, 6K to 70K, right? That's a 10x there. I mean, if we get to a breaking point again, there's going to be another time where you have like the opportunity to 5 to 10x your position. And I'm more than willing to kind of risk what I put in those kind of circumstances. So I don't know. I feel like
honestly, there's no better feeling in the world than when you have like a high conviction of your potential for a 10x of your investment. You know,
yeah,
we only get that so frequently in life, and you know we've had it several times in crypto, but that would certainly be one. 6, that's very scary, but it would be exciting at the same time.
Stop it. Yeah,
I mean, I'm
20,
not saying
20K doesn't have that feel for me at the moment. Maybe it will. Maybe some price action develops or some macro thing really breaks and we don't, whatever. Maybe the evidence changes. But that type of industry brink, you know, oh my God, there's only one bet to make Hollywood style price. At the moment, spending, you know, maybe I'm desensitized, but spending like 4 months at 20K doesn't give me that sense of urgency. But, you know, I'm open to my mind being changed on that matter.
But 10 to 12K would give you that hope.
Oh yeah, of course. Yeah, any breakdown
12,
would give me that hope.
14.
Yeah. Any real breakdown that speeds up, I'd be like, oh shit, you know, that's time to grease the palms, you know.
So then the question is, what are potentially the type of things that crypto people could do to summon such a moment? And what better one than repeating this? Yet again, shout out to everybody involved, Rookie and oh man, I forget the other guy's name, the main dude. Mo. Mo. God, Mo's so awesome. Sorry, Mo. I'm tired. Look, Crypto Fight Night is going to be in November, and you know, just a whole bunch of people spending way too much money in Dubai this November. It's just a perfect type of time for all of everything, all hell to break loose, everything to break down. And, you know, we experience capitulation as Crypto Fight Night, you know, crypto people trying to kill each other. But anyway,
they'll be in Dubai. We'll get Dubai, you know?
Yeah. Anyway, so that's going on in November. Just wanted to give them a shout out.
That's a pretty stacked card. I'm not going to lie to you. You know,
yeah, I want to watch it.
Beefs there. Yeah.
Without a doubt. Is there anything out there that excites you guys? Any market, anything?
I mean, I've been chilling XRP nonstop. It's the only thing that's been in the bull market, while everything's been going to zero, basically. I mean, just look at this. It's a monthly chart, bounce from support, mega rally. I don't have a position right now, so it's like I don't feel like I'm shilling anything to anyone because I'm just sitting here coping, not having a position. But it still looks really good, which I fucking hate because, like I said, I sold. But yeah, I mean, this still looks really good to me. If we get any breakdown, and at this point, like I'm kind of like a little bit hoping for it because I want to get this position back. But if we get any breakdown, or this entire market does something wild, I want to be buying XRP. I think it's one of the best things to buy or have like right now. Obviously not in general. You want to be dumping this shit as soon as kind of the reason for it going up goes away. But until that does happen, I mean, it looks like the best thing to own. So like XRP is still the coin that you should be trading. I think anyone, like if you're trading anything in crypto, XRP should be it.
That says a lot about the state of the market. Yeah.
Yeah.
I think like perspective wise, I know this is like typical of the show. We start by doom posting a little and then we spiral from 14K to 6K, you know, all this type of stuff. But like
just
some
keep going lower
perspective,
until you guys feel
it just
shocked.
goes lower. We're just like pure momentum monkeys, right? Price goes higher, it'll keep going higher, goes lower, it'll keep going lower. But like some perspective is helpful. I don't think we're being unreasonable. We're asking for some signs of strength where there should be strength because the level is important. Right? It's like for the S&P, it was that mid to low to mid 3,700 handle, and that turned from support to resistance. On BTC, all we're asking for is like above 20K and above 1,400 on ETH. Those areas are at the moment acting instead of support more as resistance. The bar to shift bias, at least on like a short to medium term time frame, is really low. Like I know we're doom posting and all these fetish scenarios of things completely collapsing. Obviously, we buy the bottom and get rich. Sure, great. But in terms of like what matters right now, I think we're quite reasonable in our assessment that the market's been anemic at levels where you'd want to see urgency. And then in order for that picture to change, it's like, you know, not too far away, but it's also not happening, right? So, you know, we're not asking for a lot is my point, and I hope we get it. And as far as calendar stuff, that's the only other thing that I want to mention in terms of what quote unquote excites me. We have CPI on Thursday, right? So that's going to be interesting. And also, it's like we're going into earnings season, not in, you know, for kind of quarterly earnings on the calendar or on the horizon, not too distant future. So, you know, there's still we're still correlated, still macro land, all that stuff still matters. It's just, we do like crypto. We want to own crypto, want to be long crypto in general. We just need some semblance of a reason. And I think we're being quite generous in saying, you know, at least above 2021K, at least above 1,400, not asking for a lot, but we're not getting it. And as Don shows as well, you know, on the topic.
Is this the equivalent of a TD9?
Yeah, exactly. Bring Tone Vase out to kick out these candles. But, you know, that kind of proves it more than anything. You know, 8 touches at kind of generational, previous cycle, whatever levels, and no one seems any the wiser. And, you know, maybe another useful way of thinking about it is, and I think Don used this language before, if you're going to buy this thing, you either do it kind of at the wick of previous cycles level or in the body of previous cycles levels. Because if previous cycles levels fail full stop, then it's a fucking failed experiment and we're all idiots, right? 20K is the wick portion of that, and 12 to 14K is the candle body portion of that. In any case, you know, positioning at previous cycles levels is probably plus EV. It's just a question of which extremity. It seems the upper extremity isn't playing ball at the moment. If we get a lower extremity, I think you just have to play ball and stick your neck out for a little bit.
What's that monthly body that you just circled there?
It's like 14, right?
14K.
Hmm.
You know, if that wicks, it takes us to 12 or whatever type of thing.
Yeah. I mean, do you remember when I talked about 14K, we were trading at 60 and like we were laughing about it, being like, this is stupid?
I legitimately was just like turning my nose up at you. And you know.
I'd never laugh at you, Don. I believe in you.
Oh.
My wallet now believes you.
Fucking get me out.
Yeah. I honestly have nothing to add. We've doom posted thoroughly, so I'm just want to end the show sharing a puppy. Crypto Bobby, aka Rob, just, you know, there's no bear market for his dog. Look at this. Could we all just be this happy? You know, that's what we need in life. More of this. But anyway, I legitimately had nothing. So I
let your shilling Dogecoin.
Yeah. Buy Doge. No, we need something good to happen, man. That's all there is to it. And something good to happen just means volatility at this point. But
yes.
Like at 6K volatility.
Yeah. Thanks everybody for being here. We really appreciate you joining us, and thank you to our partners over at FTX for partnering with us on the show. I made it go away. You can go to weeklyopen.com/FTX. Check them out. You can go to weeklyopen.com to check out previous episodes. You're on YouTube right now, probably. So hit like and subscribe and all that kind of stuff. We need subscribers for this show. It's too good of a show not to have more subscribers and all the stuff. So do all the stuff. Thanks for being here. We really appreciate everyone. We'll catch you next time.